the good juicy part, right, is how I was able to get. Yo, what's goody, Latrell in a hoodie, and welcome to another episode of the Brother Next Door podcast, where we talk about finance, personal development, and skills to get you further in life through actual steps and my own personal experience. In this episode, we're talking about taxes. I know I'm a little late. I am a little late. I apologize, but better late than never. There's still time to file. And so if you still haven't filed yet, then there's a great opportunity to listen in, watch in before you file to make sure you take care of everything you need to take care of. Right? Everybody knows about taxes, but there may be some things under the scenes, behind the scenes that you don't know about. And so that's what we're talking about today. And you want to stay for the whole episode because I'm going to talk about how I added an extra $1,500 to my tax return this year alone. And so let's get right into it. Understand the start date for filing taxes this year, 2024, was January 29th, and then the last day will be April 15th. So let's get that out the way right now. You have time, but don't wait, don't procrastinate, and just, not just sit on your hands with it. Take care of business, get it done as soon as you get all your paperwork in from your job and all these different things from your bank, from your investment accounts and all these things. Once you get that paperwork, let's get busy and start filing, right? And so understand, what are even federal taxes used for? Let's go into that. Government debt, Social Security, Medicare, national defense, veterans benefits, income security, think of housing assistance, different things like that, education, infrastructure, roads, buildings, salaries, and as well as salaries for government employees. What are the different types of taxes? You have income tax. So this is just the tax that you're taxed, or this is the money that you're taxed for the amount of money you bring in, right? Payroll taxes. This is the money taken out of your paycheck. So when you see taxes, that's what they're talking about on your paycheck. You see that, taxes column, and it's like, 500 whatever, however much it is. That's the amount being taken out of your uh paycheck. And so that is payroll tax. You got corporate tax. So this is the amount that corporations pay to the government for the profits that they make throughout the year. Sales tax. This is taxes on goods and services. So when you go out and buy stuff or you pay for a service and there's a tax, sales tax. Property tax. These are taxes paid based on the value of a property and land. And then you have tariff. So this is taxes on imported goods as well as estate taxes. So this is taxes for a person's estate on the time of passing. There are exceptions and exclusions, limits, exclusion limits to this. And so if you're dealing with the state taxes, do your research. There's a lot more that goes into it than just everybody paying taxes on, an estate. But those are the different types of taxes. Let's get into the tax bracket, right? So understand the tax bracket actually increased this year, which is great. So comparing last year to this year, you will see roughly a 5.4% increase in each bracket, roughly. So don't trail this a little bit, roughly 5.4% increase, or, shift from last year. And so if you look at the graphic that is on your screen now, this is how taxes work. If you never knew, you didn't really understand it, I'm about to break it down for you, right? So here we go. This is the graphic I want y'all to see. So I adjusted it because it was set for 2023, but I changed it to the 2024 tax bracket so y'all actually see what's going on here. So I'm in this tax bracket, the 22%, and so we're going to get right into it. So how are you taxed? Here it is. For hold on, let me be very clear. This is how a single person is taxed that is earning $58,000 per year in the year 2023. So if in 2023 you made $58,000, this is how you are taxed. All right, let me be very clear about that. Single, not married, not other situation, single. Here we go. The first 10%, right? Or the first $11,600 is taxed at 10%, right? So if you make all the way up to $11,600, that amount will be taxed at 10%. Last year, it was 11%. So that means that $600 between last year and this year is not being taxed at 12%, right? So you're saving money on your taxes. That's why they made it to where you're paying a little bit less on taxes this year. And so they trying to help us out a little bit, but isn't, with inflation, it ain't doing too much. But besides the point, besides the point, right? So last year, if you're making 58,000, right? The first 10% or the first $11,000 of your paycheck would have been taxed 10%. This year, the first $11,600 is now taxed at that 10%. Now the next section of your income from 11,600 all the way up to 47,150 will be taxed at the 12%. Does this make sense, right? So the first 11,600 is taxed at 10%. Then if you make more than 11,600, that's going to be taxed at 12%, and then if you make more than that, you'll be taxed at 22%. So compared to last year to this year, 2,425 will not be taxed at the 22% range, right? Would not be taxed at 22%, right? And so now, after you get through that, say you make more than 44,725. Cool. Now if we get up to that $58,000 mark, anything after $47,150 will be taxed at 22%, right? So that's what, $850? Or oh, that's way off. 10,000, yeah, $10,850, way off. $10,850 will only be taxed at 22%. So not your entire paycheck, but only $10,850 will be taxed at the 22 percentile. Does that make sense? Hopefully that makes sense. If you're not watching, watch after you get home. If you're driving, watch after you get home. If you're at home, get on your computer, get on YouTube, and watch this so it can make a lot more sense than how I am just saying it and expressing it, right? So if you're in the 22% bracket, one last time, your whole paycheck isn't taxed at 22%, right? Your whole income, your whole adjusted gross income is not taxed at 22%. Only a certain percentage of that is taxed at 22%. So I'm going to move on from that. I don't want to stay on that too long. Next, how do you file? And then IRS.gov. All this stuff is readily available. All this stuff I'm talking about. If something doesn't make sense, just literally look up tax bracket 2024, different types of taxes, all that good stuff is very easy to find. So that's the point of this podcast, me to put the information out there, and then you guys to go and do further research to see if the information makes sense for your situation. Cool, cool. Next, how to file. How do we file these taxes? There's no matter how you file. First of all, there will be a 1040 document that will be filled out on your behalf, or you're going to fill it out and be sent to the IRS. No matter how you do it, there will be a 1040 form that will be filled out and sent to the IRS. And so one way to do it, you just fill it out yourself, you mail it. The problem with this is going to take a while to get your refund. So you can do it, but it's going to take a while. and it's free. That's one way to do it. Another way to do it is to get a tax professional or a tax preparer to basically fill out that form for you, because that's really all they're doing. They're going to ask you all your information. They're going to ask you all these questions. You're going to give them all these answers, and then they're going to fill out that form for you. And then they're going to make sure, based off their knowledge, that it's correct and that you're getting the maximum benefit. You're going to pay them their cut of your tax return, and then you're going to get your money. Now, most of the time, and should be all of the time, they will get their cut after the tax return comes in. So don't pay them up front. No, don't slice them up front and then uh, wait for your return. Not like it should. Once you get your return, they're gonna get their cut, and then you're gonna get the rest of your return. That's how I did it way back, like 4 or 5 years ago. But I decided to stop going that route of using a tax preparer. Another way is to use guided tax software. So the ones I've used over the past 3 years were Tax Free USA, TurboTax, and Cash App. And so you can use any one of these. This is not financial advice. I'm not a financial expert, nothing like that. But these are the ones I've used based off my experience, right? These are the ones I've used, and like I said, have gotten my tax return for free and haven't had too much of a problem. I have used Tax Free USA for the past 2 years. So I've been using these three for 4 years. But more recently, I've been using Tax Free USA over the past 2 years because it, like I said, it's guided tax software. So they're gonna ask you the same questions that these preparers are gonna ask you in the same manner to get you the best return possible. And so that's my plug. Tax free is going to be free. You don't have to worry about it. And they're going to cover all the bases. So, from whether you're an entrepreneur or whether you're just single or violently married, got kids, dependents, whatever the case may be, they got it all there for you. They got it, so the process goes as smoothly as possible. So look into that. Now, some of these guided tax software websites do have income limits, or maybe they won't take entrepreneurs or different things like that. So take that into consideration. All these different sites have different rules as far as who they allow, who they're willing to help out and not help out. So definitely think about that as well. How to pay less. Now, this is the good stuff. This is the good stuff. How to pay less in taxes. I hope if you left, you missed out. But if you're here with me, y'all are getting the gems now. Standard deduction versus itemized. So when it comes to standard deduction, that is the standard amount the IRS has issued that you can use as a deduction, right? So say you're making, going back to that example of 58,000, and you take that 58,000, you subtract the standard deduction, and that's how much you're going to that will tell you where you fall within the tax bracket, right? And so that's a very good tool to use when it comes to lowering your taxes, is standard deduction versus itemized. So you want to use itemized when the itemized when the itemized deductions, the applicable deductions are more than the standard deduction, right? And so, say you enter in all your itemized deductions and it's higher than the standard, then use that one, subtract that from your gross income, and then that will tell you where you are in the tax bracket. And then the other ways: 401k, HSA, and then traditional IRA. All these are accounts where you invest, your money into. I've talked about these accounts already. So if you don't know what some of these are, go back. I haven't talked about the 401k yet, I don't think. But go back and watch the videos on the HSA and then the traditional IRA and Roth IRA. But I did talk about those. And so with these accounts, you're able to get deductions because you invested into these accounts, right? And so with the HSA, you're saving money um, the year you invest, and then when you withdraw, and then once you retire, you could take money out tax free as well. 401k is tax deductible when you deposit money into it, as well as the traditional IRA. But Roth IRA does not count. Why? Because you're withdrawing your money tax free after the fact. If you don't know what I'm talking about, go watch those videos. But that's in short why and how those work. So the good juicy part, right, is how I was able to get over $1,500 added onto my tax return. So initially, when I did my tax return, they give you that estimate, and so the estimate was $480, but I did not account for my schooling. So that's the sauce. That's the key that got me to where I am at. And so when I added my schooling, as far as how much I paid for school, as well as how much I paid on interest for student loans, that's what got me majority of that money back. So how much did I get in return? I'll go and give y'all the numbers. So I went from $480 initially, right, all the way up to $2,720 or $2,072, right? And so not 720. It was $2,072. And so to get that number, I paid $1,799 in student loan interest, and then I paid UNT $6,879.61 to attend the school last year. Now, understand, I paid that with student loans that accrued interest, and then I paid the interest on those student loans that turned into that $1,799, right? And so, uh, don't try to do that just to get a deduction. Like, don't if you can avoid student loans, avoid it. Don't pay the interest. You're still paying interest at the end of the day. You're still paying somebody else. So don't think, oh well, I'll just pay for school with student loans and then pay the no. Don't do it. It's don't do it. But anyway, with me aggressively paying off my student loans and starting, that's how I was able to pay that much in interest. And so there is a benefit to paying off your student loans aggressively. You get a bigger tax return. So if you're able to get your 1098T as well your 1098E forms and use them, use them because the government wants to help you out. If you're still in school, if you're paying off your student loans, different things like that, they want to help you out. So they're going to give you those deductions for paying for school as well as paying interest on student loans. And so that's how I got $2,072. What did I do with that $2,072 for the people that are nosy and all up in my business? $207 went to tithes and offering, of course, and then the rest of it went to student loans, right? So right back into it, I paid another, and then I added some money I already had. I paid another $2,000 towards my student loans this month. And so, where do you see the status of your refund? Last part I want to talk about. You find that at irs.gov. Where is my student loan? Literally, that's how you look up IRS. Where's my student loan? They're going to take you to a website. You're going to enter in your Social Security, uh, the year of your tax return, and then some other information, and then it'll show you that information as far as when it's been accepted, um, and then when they plan on sending you that money, right? And so that's the episode for today. I don't want to make it too long, but I tried to give y'all as much information in a condensed format as best as I could. Hopefully, this helped you guys going through the tax process, especially my younger folk that don't really truly understand it, but just know they have to do it. Hopefully, this provides a little bit more clarity as to far as where your money is going, why your money is going there, and how it is calculated. So, hopefully, this episode was a very informational video, a very informational episode, and hopefully, y'all got a lot of value from this episode. I don't do as much finance episodes like I want to, like I should. And so I'm gonna try to put out some more financial content as the year goes on. But if you're enjoying the podcast, donate $1, $5, $10 every single month. Give the brother help a brother out special. Um, like, comment, subscribe, leave a review, leave a 5-star review on any platform you're watching on. YouTube, subscribe, hit the notification bell, and I will see y'all in the next episode. Peace.